Last week was pretty crazy for the US stock markets. We had a lot of volatility as a lot of news came out. Most of the Magnificent Seven, namely Meta, Tesla, Microsoft, and Apple, had already released their earnings reports. And on the 4th and the 5th, we got reports from Google and Amazon, respectively. And even though most of the companies, except from Amazon, beat their earnings, investors still raised their eyebrows at the huge investments, so the capex commitments these big companies are pledging for this year. Reports are coming in that mention the spending around AI may reach up to 700 billion US dollars this year. And that is a significant amount of money that investors do not seem as confident about as some of these companies are. The biggest company of them all, Nvidia, has yet to announce its earnings and will do so on February 25th, which is a date that investors will have marked down in their calendars. The CEO of Nvidia, Jensen Huang, also made headline news just before the week started with some comments about the 100 billion they had pledged to invest in OpenAI. He said maybe the amount would be less, and that sort of freaked markets out as they interpreted it as a sign of relations between the two companies sort of might start to weaken a little bit. Nvidia stock went down quite heavily, and Huang went full damage control mode, specifying his company is investing large amounts into OpenAI in the future, but that the stated 100 billion is not a hard set in stone number and that it might fluctuate a little bit. It's clear investors are following up this AI race really closely and more closely than they ever have. And just after this Nvidia OpenAI story sort of died down, we got a huge bombshell that was dropped by Anthropic, the company behind Claude AI. They released their new Claude Optus 4.6 tool, which is designed for office and coding work. Particularly in finance and legal work, this model seemed to have the current AI competition beat, and investors are aggressively selling off multiple software stocks. To add fuel to the fire, Kimi 2.5 was released by the Chinese AI company Moonshot AI in late January and sort of came back up into the discussions when Anthropic dropped their Claude model, and it is also making huge waves, particularly in the coding space. These two models are the next big step in making coding and other office tasks a lot easier to do with AI. And that means that investors are looking to get out of traditional software companies as they are not really sure what their place is and how much of them can actually be replaced by AI and just in general by people using these tools. To sort of summarize why US stock markets were so jumpy last week, we have US AI companies pledging a lot of future investments into the AI space. We have some potential cracks starting to show between the AI leader in the US, OpenAI, and Nvidia, the leader of the production of chips to run these AI models on. And lastly, there's a big wave of new and improved AI models, both from the US as well as from China, that are taking traditional software companies by storm. This story is far from over and we'll have to see how it all plays out. But as usual, investors are trying to find some winners in the space and they want to sell off companies that can suffer due to this technological revolution.